With over $3 billion locked up in the Aave protocol, Aave is the second largest DeFi application after MakerDAO, and the Aave coin is the largest DeFi cryptocurrency by market cap. Hi, my name is Majd, hope you guys are doing well, and in this video I'm going to be explaining what Aave is, the Aave protocol, and the future of the price of the Aave cryptocurrency for those of you who are invested in it. It all started in 2017, when a Finnish law graduate by the name Stani Kulichov found interest in the newly founded Ethereum, which had been created just 2 years prior in 2015. Stani created a peer-to-peer lending platform named Ethlend and launched it on the Ethereum network. Ethlend simply paired borrowers and lenders together via smart contract. The problem with Ethlend was that it wasn't very efficient, because if you wanted to lend your Ethereum, you would have to wait for a borrower, and vice versa. In 2018, Ethlend changed its entire lending model and rebranded to Aave. The main difference was that instead of matching lenders and borrowers together, a liquidity pool was created, which is simply a large pool of assets. Lenders could then supply their assets, whether that be one of the 6 stablecoins or any of the other cryptocurrencies supported by Aave, to the liquidity pool. And borrowers could then actually borrow from this liquidity pool by providing another asset as collateral in case they default on their loan. Now at this point, if you're new to decentralized finance or don't fully understand it, you may be thinking, why is this so revolutionary? Why is Aave special? Isn't this just like any other borrowing and lending platform? The main difference between Aave's lending protocol and another platform like BlockFi, which also allows users to lend their cryptocurrency for interest and allows other people to borrow cryptocurrency, is that Aave is decentralized, meaning there isn't a single company or third-party entity that is managing these loans and in charge of the funds. Instead, the entire system is managed by smart contracts, and all of the liquidity and assets are locked in said smart contract. So when a lender deposits their funds, it doesn't go into the hands of a third-party company that you're supposed to trust. Instead, it goes to a decentralized smart contract running on the Ethereum network. There are huge benefits to a system like this over a traditional centralized lending and borrowing platform. And these benefits don't just apply to Aave, but they apply to the entire DeFi space and all the DeFi apps as a whole. The benefits are that now anyone can lend or borrow money without the need for KYC, credit checks, or any kind of documents that must be approved. And also, Aave can't deny this service to anybody, unlike a regular traditional platform like a bank or BlockFi. Aave has a lot more features than just their regular lending platform, and we'll get into those later on in this video. But for now, we're going to take a deeper dive into their lending and borrowing platform. Now, before we get into that, I want to remind you that if you're enjoying this video so far and getting any kind of value from it, a like would go a very long way in helping my small channel grow. Now let's take a deeper look into their lending platform. Lenders can deposit their funds into the Aave liquidity pool to earn interest on their funds. Borrowers then have to supply collateral if they want to borrow from the liquidity pool, and they actually have to supply more collateral than they're going to borrow. In fact, they can only borrow up to 75% of how much they deposit as collateral. This is called over-collateralization, and we'll get to why this is necessary in just a second. Say for instance, I want to borrow $900 worth of USDT. I would then have to deposit $1,200 worth of ETH, or whatever the underlying asset is, as collateral. And this is because $900 is actually 75% of the $1,200 in collateral that I'm supplying. Now, why do borrowers have to over-collateralize? The reason is that in case the underlying asset, which in this case is Ethereum, drops in value, there will still be enough liquidity in order to repay the lenders. So if the $1,200 in ETH that I deposited drops in value to $1,000 because Ethereum's price fell, then that ETH may actually be sold for USDT, which is called liquidation, in order to repay the lender. So if the $1,200 in ETH that I deposited as collateral drops in value to $1,000 because the price of Ethereum fell, that ETH may be sold for USDT to ensure that the lender can get their money back. This ensures that I never have more value borrowed than I deposited. Now, a common question that may come up is what's the point of this kind of loan if you have to deposit more than you're borrowing? And I'm going to explain this through an example. Say you're like me and you have your entire net worth invested in cryptocurrency. And now you have to buy a textbook for school, but you don't want to sell your cryptocurrency because you're afraid that it's going to go up in value. So I could move some of my Ethereum over to Aave and deposit it as collateral in order to borrow some USDT. I can then go and sell this USDT for Canadian dollars and use that money to buy the textbook. And then next week, when I get paid my paycheck, I can go rebuy this USDT and deposit it back into Aave and get my Ethereum back. Essentially, as a borrower, you can use your cryptocurrency like Ethereum as collateral in order to take out real-world money. Or you can take out a stablecoin in order to buy more cryptocurrency as a form of decentralized leverage trading. Now, as a depositor, when I deposit my USDT into the protocol, I get back another coin called AUSDT. And this is the really interesting part. These A coins can be traded into the protocol for the underlying asset, which in this case would be USDT. However, this applies to all the coins on Aave. And the fact that these can be traded back in for their underlying asset makes the value of these coins the same as the underlying asset. So it's kind of like a stable coin to the stable coin. They're pegged to the underlying asset. Now, the really cool and crazy part is that these A coins are just ERC20 tokens, meaning they can be sent to a different wallet or even exchanged on a decentralized exchange. So for instance, if I deposit 1000 USDT, I will get 1000 AUSDT in return. And let's say I send these AUSDT coins to a friend. These coins will continue to accrue interest in my friend's wallet. And these AUSDT coins will actually continue to grow as the interest comes in. So now my friend is actually acquiring this interest, and they can at any time go to Aave and deposit the AUSDT or whatever the A coin may be in return for the underlying asset plus all of the interest acquired over that period of time. Notice how Aave tokenized debt on Ethereum and made it so that debt can be transferred from person to person and still accrue debt no matter who it's with. Now let's talk about those interest rates. When you borrow from the Aave protocol, you have two choices. You can take a loan with a regular interest rate, or you can take a loan with a fixed interest rate. The regular interest rate changes depending on supply and demand. However, the fixed interest rate is, as the name suggests, fixed, and it's calculated based on the average of the regular interest rate over a specific period of time. Now, the fixed interest rate is always just a bit higher than the regular interest rate at the time that you take the loan. And the reason for this is to act as a safety measure in case the regular interest rate goes up a lot. Interest rates increase when the liquidity of an asset becomes scarcer in the liquidity pool. And this is in order to incentivize lenders to deposit more of that asset. I should also mention that there are currently 22 markets or assets on Aave, and 6 of those 22 coins are stable coins. Another super cool feature that is specific to Aave only and doesn't exist on other DeFi lending platforms is flash loans. Flash loans aren't really for regular people that are taking out a loan, unless you're a yield farmer, which I won't get into that here. Flash loans are usually used by other smart contracts or dApps. Flash loans are when you take out a giant loan from the Aave protocol, but repay it in the exact same Ethereum block. If you don't repay the loan in the same transaction, the Aave protocol will actually fail the loan and the loan will never be taken out. Another use of these flash loans is to take advantage of price discrepancies between DeFi platforms and also to engage in collateral swaps. Now let's talk about the Aave coin. The Aave coin has two primary functions, and the first one is for the safety module. Aave coin holders can stake their Aave coins and earn rewards on their stake. However, if there's ever a shortage of a specific asset in the Aave market, up to 30% of those staked coins may be actually taken and used to pay lenders back their deposited amounts. And as a reward for taking on this risk, Aave coin stakers actually earn part of the interest rates coming from the DeFi application. I also want to mention that an event like this is very unlikely to happen, and the staking rewards are probably worth the risk. The second function of the Aave coin is for governance. Aave coin holders can vote on proposals to the Aave protocol. They can also vote on which coins should be added next to the Aave markets. Now, as far as how the Aave coin will perform as an investment, my opinion is that it's a super solid blue chip pick. The tokenomics for Aave are actually really good. Firstly, there are only 16 million Aave coins, which make them super scarce, actually scarcer than Bitcoin considering just the supply of the coins. Also, all of these 16 million coins are in the hands of the community, which make it super decentralized. The growth of the DeFi industry is on a very sharp trajectory upwards, and I really do think that this is just the beginning of this amazing technology. And as of right now, Aave is on the cutting edge of DeFi, and so the price of the Aave coin will inevitably increase. In my last pick, top 4 undervalued coins, Aave was one of my 4 picks, and I really think that in 2021, we will see Aave continue to climb the CoinMarketCap charts. If you enjoyed this video or got any kind of value from it, then a like would go a long way in helping my channel grow. And also, if you want to see more cryptocurrency videos like this one that aren't just stuffed with hype, then go ahead and consider subscribing. Also, if you want to join my crypto Discord server, I'll leave a link to that down below. Finally, before you click off, I want to introduce you to Portfolio View. Portfolio View is a mobile app I developed initially for myself, and I had no intention of releasing it to the App Store. However, eventually I decided that the app is too good to not share with the rest of the world. Portfolio View is the simplest and best looking crypto tracker on the market. It shows you your entire portfolio and the market at a glance, has price charts, portfolio distribution, profit and loss for different timeframes, and individual transactions, and my favorite, price alerts. Check out the free app in the description below.